Hi everyone and welcome to today's morning report with me, Richard Perry, Market Analyst at Handtech Markets for Thursday the 1st of May. The handover that we've had today has been fairly mixed and fairly muted in fact because you've had a fair amount of the Asian countries being off on holiday for the May Day public holiday there, and also some of the European countries as well, such as Germany and France, are also on May Day. So there's not a huge amount that's pushing over in the European trading at the moment. However, certainly the risk sentiment seems to be fairly positive, and that has come on the back of a couple of bits of data actually. The Fed meeting last night, although they continued to taper the asset purchases by another further $10 billion down to $45 billion, the outlook seems to be that they're going to continue to remain having low levels of interest rates for a considerable period of time. So the market took that as a little bit of dollar negativity, and certainly that has helped to push the euro higher, the sterling higher. And also many of the major currencies as well against the dollar are showing gains today. So a decent start in terms of the FTSE 100, which is around about 25 points higher. Currently back above 6,800, but FTSE is pretty much the only index in Europe that is trading today. The risk appetite, as I said, is fairly positive, and that is shown in this VIX index that continues to fall away. The Dow actually last night saw a closing high, all-time high on into the close last night, so that is also reflective of the positive mood that we're having in stock markets, and certainly this falling VIX indicator certainly suggests that. In terms of the currencies on the dollar index, the weakness of the dollar that we've seen in the last day or so, we had the weaker than expected GDP number out of the States, but you would certainly say that's backward looking, and also with the Fed's statement as well, they said in the FOMC that the economic activity was beginning to pick up, and certainly they were noting that and following on from that weaker winter data. So that certainly is backward looking, that GDP number. The data that we need to be watching out for today are the PMIs. We've already had the Chinese manufacturing PMI at 50.4. Sorry, that's actually wrong on the sheet there. It should be 50.4, and that is slightly above last month's reading of 50.3, but it was slightly underneath expectations of 50.5, so sort of a little bit of a mixed bag there, and hence a little bit of mixed trading in Asia as well. Moving on to the UK PMIs, that's actually forecast to come in at 55.4, which is just slightly above the 55.3 that we had last month. But you will notice that we had this strong move in the months of 2013, and you could argue that we're now rolling over maybe. So it'd be interesting to see if it comes in under 55.3, how that is taken by the market, whether that is considered to be a negative signal in terms of the PMI being a forward-looking bit of data there. So we'll watch out for that one, and that's at 9:30 UK time. You've also got the ISM number for the States. 54.3 is the expectation there, so again slightly higher than last month at 53.7, so that's at 3 o'clock this afternoon. Both numbers could certainly have an impact on cable, but also the having impact on euro-dollar, especially in the afternoon. So that takes me on to my chart of the day, which is silver. And silver is actually under real pressure. It looks like it's testing these key lows around $19. That's on the intraday hourly chart. First of all, look at the daily chart, and this suggests that every time we come back towards this 19, it's finding support. So that would suggest over the past few months this is a key level that needs to be maintained. Otherwise, we're going to see a significant breakdown. back towards the level that we last saw at 18.19 in June last year. So we'll watch out for that, but that does suggest that we are under pressure at the moment. And looking at the intraday chart, on the daily chart, there's certainly these momentum indicators under real pressure, bearish configuration across the board, and that is actually mirrored on the intraday chart as well, with bearish configuration and rallies being sold into. You've got this resistance at 1927, which was a key low from the 29th of April. So you'd be looking at selling into a rally towards there. You'd certainly say that the moving averages are providing the basis of resistance. On the daily chart, you'd say that this 21-day moving average is probably over the last few weeks become the basis of resistance, and that's at 1962. So there could be actually some room for an unwinding technical rally before possibly another sell for further pressure on this $19 support. The bottom of that support at 1880. So it certainly looks like selling silver into strength is the way to go, and I'll speak about gold in a bit. It looks like gold is also breaking lower as well. So both these two precious metals are under real pressure at the moment. Okay, so I wish you good luck in your trading on silver and whatever you choose to trade today, and I will speak to you later. Thank you.